Thank you everyone for joining us today. We're sitting down with the CEO of OKCoin, Hong Fang. Thank you so much for joining us today.
Thank you, Justin, for having me.
Could you tell us a little bit about yourself, your background, and how you came into crypto?
Sure, yeah. Um, I most of my professional life has been on traditional Wall Street. I spent 8 years at Goldman on the investment banking side, actually within financial institution groups. So spend a lot of time with all kinds of financial institutions and fintech companies on the capital market side, doing M&As, doing spin-offs, all sorts of things. It's been a pretty good experience for me. It helped me to really develop a well-rounded perspectives around business fundamentals, around how capital markets works, what matters to the capital market, what investors care about, and the relationship between the fundamentals and kind of what the capital market sees and reflects. But by the end of the day, I feel like when I look at the opportunities, the capital is really kind of fueling and helping the business to grow. But if you look at the companies I've been working with, on the one hand, it's the traditional financial institution. On the other hand, you've got fintech companies that are trying to bring technology into the space, just like what you see in all the other industries where technology is helping to revamp our life. They're having a little bit tougher time in fintech, in financial institutions, to be honest, compared to what you see in music, in social media, etc. But they're trying, right? So I find that to be really exciting, and I really want to be on that investment side and try to get closer to what's really happening and driving the changes. So 8 years into it, I decided to make a move and switch to the investment side and started to do growth equity investment. And also back in 2013, I got to know about Bitcoin. Actually, one of my senior banker was talking about it and was kind of raving about it, actually, saying that this is such a new thing. I didn't really get very deep into it back then, but I knew about it and I started to kind of follow things around what's happening there and try to get a little bit more understanding about it. And then after I switched to the investment side, I got an opportunity and get to know OK, founder of OKCoin back then, Star, who is a pioneer in the space. He has been starting a crypto fiat exchange back in 2013, so very early on. And when I got to know him, OKCoin is already the largest fiat crypto exchange in China. And I would say if you look at the global landscape back then, because China transaction back then actually is kind of in the leading position worldwide. OKCoin was also from a volume perspective also kind of a top three globally. So I found it fascinating, and that was actually the first investment case that I did after I made the switch. And the reason I find it fascinating is because thinking about what happened when I was at Goldman. I joined Goldman in 2008, and that was a pretty interesting time when you see everything tumble down and how the government of different countries try to figure out what's going on and try to help prevent the terrible to happen. But there are institutions too big to fail. And I was sitting there in the financial institutions group, kind of in the middle of the world war, it's fascinating to see when I work with all the banks in the space who basically was following the signal in the market price previously, but obviously those market signals reflected in the price was misleading. Because of the previous monetary policy that kind of had a long-term effect on the market, but didn't really show up until a couple of years later. And then you see the huge amount of wealth destruction and wealth reallocation because of that. I was working in a bank rescue, basically, and also working on kind of blind pool creation, where a lot of the banks have failed, and then investors would put money in and try to figure out where where are potential kind of wealth creation out of it. But if you take a step back, look at it, it's not really wealth creation, right? It's really just reallocation of wealth, and it doesn't feel right. So when I think about that and take a step back, it's really the monetary policy that's probably driving everything, because I ultimately believe in free market, and the real foundation, the fundamental foundation for free market to really function is that the price has to work, because all the participants in the market, you look at the signal of the price, and you need to figure out what's really happening with everybody else, and try to kind of factor in what's going on, and how I can benefit from that, from my action in that larger context. But when that price is reflected, not the real price, but a nominal price, and with embedded inflation rate in it, it's really hard for participants to figure out how to efficiently allocate resources on an individual basis. So ultimately, when I look at kind of Bitcoin, I think I got excited about it back then from an investment case. Obviously, first of all, the leading position of OKCoin back then is interesting, but fundamentally, I feel like the Bitcoin is a very different way for us to see how the monetary policy can play out. It's a separation of the monetary policy and the state, and it's a real free market version of monetary policy. And also I feel I see interesting signs in Bitcoin where in the future, not only in monetary policy, but also in way how a large group of people can actually cooperate with each other in a system where there's no intermediary sitting in between and try to coordinate who is doing what. But they all know what they get into. There is a very clear set out of the rules and the protocols that's been built into the system. And they're all seeking to maximize their own personal interest. But however, the system is so beautifully designed that when everyone is trying to seek to maximize their own interest, it actually maximizes the interest of the overall system. There's a maximal externality in it. I think that is a really beautiful thing, and it just give me a glimpse into what the future potential new quote unquote relationship can be between different people. Maybe it's not in the future, not in the corporate format that we're looking at. There's always a debate in when we look at financial market and how prices, the wealth is allocated. When I was at Goldman in 2008, ironically, Goldman is the best of Wall Street houses. But back then, it was almost a tattoo. And we were joking internally and saying, if you go to a social meeting, you don't really want to say you're working at Goldman because you got thrown out of the bar or something like that. Because if people feel like because of Wall Street, some of the wealth allocation is not fair. I think, ultimately, yes, Wall Street is playing a role in that. However, it's really, I think the fundamental is the monetary policy, right? Everything is building on top of it that is driving it. People are just behaving on their best interests, either individuals or institutions like Goldman Sachs or Morgan Stanley or any other financial institutions or any other companies are trying, wealth managers trying to maximize return in the market. They're all just pursuing their trying to maximize their interest. So it's really the fundamental design of the overall system that needs some re-examination. So that's why fundamentally when I was looking at OK back then, I feel like what, this may be an interesting. It's probably still a very remote future, but at least it shows us a possibility of what a better future can be. And when I look at my experience at Goldman, working with traditional financial players versus fintech, it's quite clear that the time advantage is actually on the fintech side. When you are really trying to use technology to push for a better way to create value, more efficient way to create value, a more democratic, more distributed way to give people, to give individual the power to create information, distribute information, to cooperate and figure out what's the best way for themselves. That's actually the more value creation long term that we can see. So ultimately, that's what was driving the investment. And I was back in end of 2016, even before the bull run. And then we went through, ups and downs between 16, 17. There was the ICO craze. And then there was, after that, a quick bust of the bubble. It was to be honest, right after the bust, right after the bubble, I went through some soul searching. I was asking myself, was it right? Did I make a mistake? Because when you are in investment, you always want to ask questions, question your previous assumption, and try to be open-minded about the fact that you may be wrong. It was a very interesting period for me, because I feel like that was a time when you see, I came out of it, out of those painful years, actually with a firmer belief that this is the future. When many people are saying Bitcoin is going to die, it doesn't, right? It's still around. Yes, it went through ups and downs, but those developers, open source developers who firmly believe in it, and many early adopters firmly believe in the power of Bitcoin, and the empowering capability of Bitcoin when it comes to the kind of sovereigntiness of financial freedom, continue to stay. The reason that the bubble went up and went bust is just because I think people get too much ahead of themselves. Particularly the capital market went too much ahead of themselves, just like what we have seen in the past about internet, about many other technology innovations. And so that's why when I came out of it, I said to myself, look, I think my previous assessment of this, I still firmly believe in it. However, that also confirms my assessment that when you look at either you invest in something or you're building something, don't get carried away by the noises, and don't get carried away by how much capital you're raising. What's the price today versus what's the price in a month. What really matters is the fundamentals. Don't forget about what got you into the industry. For most of us who got into the industry, the initial trigger is probably the price, the volatility, but the price of Bitcoin. But ultimately, I think particularly for early adopters, it's not just about the price. It's about the ideal, the hope that we see in it. It's about what we think we see in Bitcoin versus what we actually see in reality, right? But there are a lot of restrictions, limitations, real limitations in technology that are just in the current system that's preventing us from unleashing that future. So the only thing that we can do is really to work on it and try to make it reality, to really make technology breakthroughs, continue to make improvements, and on kind of OKCoin side, try to continue to do what we do and try to build a better platform and give people more access to crypto assets try to help people to understand crypto better. That's the only thing that we can do to really stay focused and ultimately, make it happen. So that's really, how I've been through over the last couple of years. And last year, I finally made the decision that, what, if I really believe in it, when I just join it. I think it's far more exciting to be a builder than just a pure investor. And I think I've been over the fence for almost a year, and I feel like I've made the right choice. It's been a increasingly extremely rewarding experience working with a team to invest in what we believe in.
Great, thank you. I'm curious, could you speak a little bit more about the challenges you faced in 2008, either personally or professionally? There was although some people suggest that Satoshi Nakamoto had been working on Bitcoin since as early as 2006, approximately, although we do not know. There
Yeah.
are references to that crisis in the Genesis block, particularly
Yeah.
in the Bitcoin code. So could you kind of speak to that time from your perspective, sort of on the opposite side of the fence, if you will, as perhaps Satoshi was, or who, whatever Satoshi is?
Yeah, 2008, I joined Goldman in the summer. The bubble actually went bust before I officially joined Goldman. It was an interesting time when before then, a year before then, the LBO wave was pretty high still, and everybody was very excited. All the bankers on Wall Street was very happy about the big bonus that they were able to collect, and then it just suddenly happened. Now looking back, I think it was pretty obvious that when everybody was being very optimistic about the market, something was wrong, right? Back to what I believe in, which is when there's no one saying different, giving you a different perspective, you ought to ask yourself, is something wrong? It's actually a good thing when there are different voices in the market. But back in 2007, everybody was very enthusiastic about the market and feeling that they can add on as much leverage as they can without any negative implications. 2008 was definitely the proof that that won't last. Leverage out of nothing won't last. Ultimately, our own whole financial system is built on a monetary policy where you just create leverage out of nothing, and you just hope that you can pay down that leverage, delever, quote unquote, delever over time through the increase of production. We've been able to do that in U.S. Mostly because number one, U.S. dollar is the global reserve currency, and number two, there's huge technology innovation that's been going on in the Silicon Valley, driven by all the technology companies that unleash creativity, unleash production, and drive the innovation. If you look at the GDP growth in US, the GDP growth, annual GDP growth in US is probably not as big as what you see in China, for example. But the composition of GDP actually changes every year, right? With a piece of the GDP driven by technology increasing over time. So that I think has probably not something that everybody was aware of, particularly in the middle of chaos. And in 2008, when the whole world collapsed, I was a newbie on Wall Street, not knowing what's going on. From a personal perspective, it's a learning experience. It's a learning experience to figure out how everything worked in the financial institution, how banks, insurance companies, asset managers, and all the special lending companies, they work all together. Banks is definitely sitting in the center of everything, and it's allocating all the resources that other parts in the economy ask for. But either whether you're a banks or asset managers or leverage structured product stuff, you're chasing the yield, and whether that yield chasing activity help us to allocate uh, resources into real economy, into where money is really needed, that really depends on the market situation of that time. In 2008, right before 2008, it was obvious that the money is not going into the right direction, and that's what has been leading to the disaster of that time. um, Personally, I found that to be really educational. But to be honest, back then I didn't really know what was going on, right? And I was very happy that I was able to actually keep the job back then without without losing it, because a lot of my friends, both within Goldman and in other Wall Street shops, they ended up losing their job, getting quote unquote restructured. But now, after a couple of years looking back, it was obvious that it was really a misallocation of the financial resources. And when we got into that cycle again, a couple of years later, it was pretty obvious that that's something that we're debating these days, whether the capital injection by the Fed into the market is really going into the right direction. There can be many arguments of whether they're working or not, but I think it's really hard to find a better alternative within the existing system for them to stop the liquidity crisis, but at the same time solve the solvency crisis. They're just really running out of tools, just because of the design of the system itself. Does that answer your question?
Yeah, absolutely. I guess just a couple more questions. I was wondering, you mentioned in 2017 that caused you to do some soul searching. I had that same experience. 2017, I still see as somewhat of an anomaly in this space, and it did also kind of like, whereas from maybe 2009 until 2015 or
Yeah,
2017, the space was really defined by illegal and
yeah,
illegal activity. Although there's been like a lot of reports to suggest that that's a small, uh, it's a far smaller percentage of the actual activity in the crypto space than people have believed because of these early sort of activities and also misnomers.
yeah,
2017 is also this, I think, other narrative that truly impacted the space. So could you kind of speak about 2017's effect on your
yeah.
view and the soul searching you did in the wake?
Yeah. So we I made we led the investment into end of 2016, and we closed it in very early 2017, and then there was a bull run. And there was a lot of white paper projects coming out, asking for investment. Um, so because of our investment in OK, obviously I got a lot of people coming to us and say, hey, would you be looking at this? Would you be interested in doing a crypto fund, for example? We would look down that path. It was interesting time, because when I look at some of the white papers, I was having a hard time figuring out what's really going on. And then I was talking to people who in the industry, right? And we were discussing what really is possible, what are the technological limitations that we're facing, that prevent us from making the impossible possible. I do believe that there are great things that we can do in crypto space, because sorry, I'm probably not going to try to it's probably not a straight answer to your question, but I want to kind of tell you what I've been through. So in I spent a couple of years in China when I was doing growth equity investment, and it was a refreshing experience too, because when I see a lot of the uh, internet companies, technology companies in China driving changes as much as what we've seen here in the Silicon Valley. It's refreshing to see, some of the business models that can be quite different over there versus here. But there are also obvious pain points that came out of it. For example, there was this company called Didi, which is the kind of similar counterpart to Uber in China. It was invented because it was hard to grab taxi back in Beijing, and Didi was born with a similar vision that you can use this to really help matching the two sides of supply and demand for taxi hailing. And it grew really quickly, and it turned out to be a huge help. But very quickly, once it got to the almost the monopoly position in the market as kind of the tax hailing tool, it somehow became its own enemy. And there were a lot of customers, including myself. I actually found that it's very hard to grab a taxi with Didi because they somehow they use their allocation, their algorithm to because they have a matching system, so they would find they know the driver supply, and they know who is looking for taxi drivers, so they have an algorithm to match the two sides. But somehow because of their own commercial interests, they also have their own fleet business that they want to push to the customer. So sometimes they intentionally kind of work on that algorithm, so you don't actually get to get the nearest taxi to you. And sometimes people were forced to kind of choose their own fleet instead of real taxi around. So I have got a couple of occasions where actually, I were able to just get taxi nearby or through another small vendor. And the taxi driver would tell me that, look, I'm actually very close to you, and somehow I couldn't get the matching order from Didi. So that was actually an interesting topic. The reason I brought it up because when I was talking to people who were trying, to launch crypto projects with ICO, one of the ideas is similar to this, right? It's like, the crypto like Bitcoin, it works the best in a platform situation like this. When you try to build a multi-party platform, it's very hard, and that's why a lot of the VC money was poured into it, particularly in China, and give out a lot of subsidy to both the drivers as well as the consumers, and try to accelerate the nurturing of the platform early on. And that was what happened with Didi and with many other early stage technology startups, particularly with the characteristics such kind of multi-party platforms. But once the platform grew to have a certain scale, its own interest driven by the capital investment, right? Because you were funded with venture capital, with actually a large amount of venture capital, and you have to give return to investor. So they to provide return to their early investor, they have to work on their algorithm to create profit. And their own fleet is their own profit generation machine. But somehow that deviate from their original intent of trying to do good to the system. It doesn't mean that it's ill intention, but that's just how the system works. That's how it's designed, because the capital is really funding the growth. But in Bitcoin, what we see is, it's a space where the return, the early participants of the ecosystem, particularly including the developers, the co-writers, and miners, they put work into it. They help nurture the market, and they're incentivized to do so because either their belief in this, or the early speculators who see the price appreciation and jump in and help grow the market. And and that's a situation where we see the possibility where you can use this model to build a crypto version of Uber, of DD, where every participant got into the space, and somehow there's a native token of that economy, quote unquote economy. Either the drivers or the consumers, the drivers, when they offer the taxi service, they probably, that's their proof of work. And then when customers use the taxi service, that's their proof of work. And somehow those kind of their contribution to building the network can be recognized early on in a similar algorithm as what we see in Bitcoin. The early adopters can probably get a disproportionately larger reward for their contribution later on. So ultimately, what we were discussing is, this is the very early inning of what it can be, but we can see a new form of association coming up that is not, instead of being funded by venture capitals, it can be funded by all individuals who are interested in building this. And ultimately, when it does grow to a larger scale platform, such platform will not be distorted. The algorithm will not be distorted by that third party which control the data, all the data, and can use the data for their own interest instead of for the interest of all the participants of the network. So with that, I still believe in kind of the future, but however, after a lot of discussions and I kind of looking into what's available in the technology right now, I realized that the latency and a lot of the kind of technology restrictions back then and even today make it really hard to actually bring it to life, bring that kind of ideation to life. And people back then in 17 just went too much ahead of themselves and thinking that, okay, I'm just looking at the price in the market and I'm hoping that someone else will take it from me at a higher price and I'm out. And the music can go on like that. Unfortunately, the music doesn't go on forever. There is always a time when reality catches up and the music stops, and that's when we find out that who is actually being naked. So it was. I don't think I had very different perspectives by the end of 2017. But it did ask, push me to really revisit my assumptions when I was making the investment decision in 16 and asking myself, is this real, right? Am I overthinking? Do I miss anything? And luckily, I didn't put any money into any of those ICO projects because I just don't feel like that's right. And I don't think there is valid foundation for any of those projects back then. But it also confirms my belief that this is going to be a very long journey, because a lot of the investment need to be made into the underlying chain and cryptography, or it's not just cryptography. It's all, it's a combination of cryptography and also the design of the incentive system. What's the best way to it's a complicated economic activities, right? When we talk about a situation like creating a crypto version of DD or Uber, it's not exactly the same as what we see in Bitcoin. So it's going to be a far more challenging proposition to fulfill. But thinking about what have happened over the weekend about SpaceX, I think nothing is impossible, right? We need a kind of and also all the technology innovations we've seen today, like using starting with iPad. That was iPhone, iPad. That was just more than 10 years innovation. So I really think that there is a delineation between um, vision and bubbles, and 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 it takes courage to really see through the bubbles and stick to the vision, and also after all that, it took some time, but I think I came out of it with a firmer belief in the long term future of crypto. It just take a longer much longer time than I originally was thinking, and I think it would also take a it will take a lot more co, co what do you call it, like concerted efforts of the industry to really focus on what is important for us. And that's also why after I joined OK on the operational side, I was actively pushing for contributing to the developer community, because I firmly believe that that's really the foundation for us to continue to grow. It's amazing that when you think about, crypto industry, which is a multi-billion business nowadays, that have been through all the up and downs over the last 10, 11 years. It was really built and supported by, when it comes to Bitcoin, it's just, a few dozen of Bitcoin core developers and some of the people working on this in their spare time. I think it's amazing, and sometimes it can be scary as well, because you never there are always a group of people who are firm believer in it and are passionate about it, and willing to work on it full time or spare time, no matter what. But this is the foundation of our industry, and if we are not looking to make technology, continue to look to make technology breakthroughs, and just focus on price, we can really get carried away by the market price, just like what happened in 17, or even in the traditional market again and again. And it's not going to be sustainable. So from our perspective, within OK, we do what we can do, right? We build a platform. We try to make it easy for people to buy and sell and trade, because that is a critical piece of free market. In a free market, you ought to have a place where people can freely buy and sell and trade, and getting in and out of their position, no matter where they are, no matter what language they speak. And it's also a place for price discovery. That's a critical piece to how the whole market can operate. But at the same time, the technology foundation is also very important, but it's not very visible. People tend to forget about it because that there's no obvious price tag to it. So.
In closing, could you kind of discuss crypto as an investment vehicle in 2020 and OKCoin's unique positioning?
Sure. Yeah, I think crypto is definitely a very it's a asset class that everyone should consider. Obviously, it has its own volatility attached to it. So if any people who have a very short term horizon, or has a great, very, very risk averse, should be careful. But I would encourage everyone to do research and put some money in Bitcoin. In 2020, particularly, when we see what we have seen back in 2008 happening again on a totally different scale, but also couple with the challenges in real economy that has been brought about by COVID and many other situations. I think it was a very powerful reminder that having something like Bitcoin that can help you anchor against potential future inflation is going to be really helpful, very, very powerful. So I think it's a very important part. It should be a very important part of asset allocation for everyone. The percentage, I think that really depends on how much the investor has, how much due diligence they have done in Bitcoin and crypto, and how comfortable they feel about it. But I think it's a piece that should, everyone should have some percentage of that in their portfolio. For from my perspective, I'm a firm believer. I'm a hodler, and I put a certain percentage of my asset in Bitcoin, and I'm just putting it there for long term. I think for me, it really represents a shift in the financial paradigm and even in social fabric. So I'm a believer in it, and looking at all the liquidity, quote unquote liquidity, that the Fed has created and bumped into the system. The inflation is not happening right now in the U.S. just again because of the global currency reserve currency that USD is serving. But I don't think there is ever a free lunch. At some point, we'll pay for it. It just takes some time for the reality to catch up. The reality has already caught up in many pockets in Latin America, in Africa, where you see people run away from their local currency, previously into USD and now into Bitcoin, either individually for their own wealth protection, or even for some of the businesses locally in Latin America. They use Bitcoin to settle cross trade, cross border with their counterparties in other parts of the world, in Asia, in US, etc. So the signal is out there. It's just probably not too obvious to people in US who haven't really experienced that horror of inflation yet. Even in China, I can definitely feel the price, the nominal price, deviation of nominal price and real price, and we also see some of those happening in China as well, right? But the good thing in China is that there's a lot of value creation in the society, driven either by the technology or some of the globalization that's happening there. So it's not as bad as what we see in other parts of the world. But somehow when the central government can just create money out of nowhere, it's just a pure asset allocation tool. So for people who really care about the preservation of their wealth, not even just thinking about growth, value growth, but just preservation of their wealth longer term, I would strongly encourage people to look into Bitcoin, understand Bitcoin, really appreciate what's going on here, and challenge the previous assumption that inflation is a normal part of economic operation, and go from there. And you asked about how OKCoin play in this overall picture. Again, we firmly believe in a future of crypto, and we feel like in a free market crypto world, a place where you can actually freely trade in and out of crypto, into any other assets, either crypto assets or other fiat assets, and find the right price through such trade is critical, because in the market, price is in a market with billions of participants, individual participants. Market price is the only signal that you can get, educated signal that you can get, to figure out what's going on and use that as a guidance for your own decision making. And we feel like being able to really build infrastructure and help us to develop a alternative financial system in the crypto space is our mission, and we continue to do that. We continue to focus on building the fundamental technology and rails, payment rails, fiat on ramp and off ramp rails, to make it easy for people in different jurisdictions to get into crypto or out of crypto if they want to. And we will continue to kind of explore ways to build other parts of the other parts of the financial system, the crypto version of the financial system, to help people ultimately get financial freedom. So that's what we have been focused on, and we have a great team of people. We are all very motivated people. We work on things that we believe in. So that I think that's a fantastic. That's been a fantastic experience for me.
Thank you so much, Hong Fang, the CEO of OKCoin, for joining us today, and thank you everyone for listening. Have a great day.
Thank you.